Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Good morning, everyone. I'm T3 Live Editor-in-Chief John Darsie.
And I'm Brittany Umar, and together we bring you Morning Call. So futures are pointing to a slightly higher to nearly flat open this morning. Yesterday, markets rallied from the week open to close nearly at the flat line. So what do you think about the resilience of the market right now?
I think resilient is the word. This market just continues to shrug off any negative headlines that we get. We've had very choppy action over the last couple of weeks. Some faulty signals that we've noted, on T3 Live on the blog. Some weakness that's come into some leading financials. Some weakness that's come into some leading tech stocks. But every time we do highlight some of those faulty signals and some of those red flags, all we're doing is rallying back to highs. And you have the S&P within a couple points of its all-time closing high. You have the Dow with at all-time closing highs. And as much as you want to point out some red flags and things that aren't perfect about this rally, the trend remains firmly to the upside, and that's just the environment that we're in.
Well, concerns about the European debt crisis and Cyprus, and even the potential that Cyprus could become a template for other European nations has really been what's affected the market a lot lately, and especially this week. And as Cyprus banks reopened today, do you think that could potentially weigh down the market?
Yeah, yesterday we came in, and the reason we gapped down was because news of a poor Italian debt auction, which is the first time we've had that type of headline in a little while. But the market opened fairly healthy gap down, but it was able to rally all the way back to the flat line. And then the Cyprus situation, there are a lot of nerves and there's some anxiety surrounding what's going to happen as they reopen the banks. Is there going to be a bank run? They've imposed some limits on how much people can withdraw to avoid that type of run, but that limit is going to goes away in 7 days. And there's headlines this morning of chaotic scenes outside of banks, big lines, and it's hard to believe that all this anxiety is not having any sort of effect on U.S. markets. Maybe it's the fact that we have a holiday shortened week this week. We have Passover. You have the end of the first quarter coming in, and people just aren't doing a lot. But it'll be interesting to see whether those European headlines do remain in focus and actually do start to have an effect on the broader markets.
So for the meantime, what would be the key levels that you're watching in the S&P right now?
Yeah, we're going to take a look at the chart here. As we talked about, you have the S&P within, a couple of points of all-time highs, and it's crazy to think about how far we've come since the financial crisis. And sometimes it doesn't feel like we're at all-time highs. You don't have that exuberance that you often get with the market at these type of levels. We talked about the 10-day winning streak we had in the Dow. I'm going to pull up that index really quickly. But the last time we had that long of a win streak, a 10-day win streak, like we had here in early to mid-March, was in 1996. And during that time, you had huge percentage gains, and the market was roaring. And right now, it's just a little bit lethargic, and it's sort of just tiptoeing higher. And it certainly doesn't, feel like an all-time high market, but that's where we are, and we got to get used to it. And the all-time highs in the S&P are going to be that important pivot level to watch. And if we do break above, it could bring some momentum and some new money back into the market.
Well, in other headlines this morning, BlackBerry beat on earnings. It's up about 3% pre-market. Do you think that's helping to lift shares a little bit this morning? Yeah,
BlackBerry is not a huge component of any index. It becomes sort of a non-factor in the market to a certain extent. But when you have a quiet tape, with the holiday shortened week and light volume like we've seen the last couple of days, all it takes is one little report like that, better than expected report, to boost futures and add a little bit of a positive tone to the media and to the market this morning. And like you said, we're up a few handles. We'll go to the chart of BlackBerry. We'll take a look at it. It's sort of been reinvigorated a little bit by not only the new Z10 and the new phone lineup they're trying to come out with to revamp, the type of company they are, but they changed their name. And it shows that perhaps a rose by another name is actually sweeter. So Shakespeare didn't know what he was talking about. But BBRY, since it changed its name, it's been acting fairly well. But you had the first anecdotes about sales for the new Z10 phone. If we go back to the chart here, you can see this big wide range bar when those sort of disappointing sales numbers for the Z10 started to come in that first day that it went on sale. And since then, BlackBerry has been trying to find its footing. And we'll go to the 5-minute chart just to see where it's at pre-market. It was up pre-market and it's sort of starting to weaken, so that could have an effect on what happens with the broader market today. We'll definitely keep an eye on that, but looks like the enthusiasm that was there pre-market for that surprising beat on BlackBerry is starting to dissipate a little bit since Brittany and I stepped into the studio. So that'll be something that we have to keep an eye on for sure.
All right, well, we are going to switch things up a little bit today in this morning call. Usually we, of course, talk momentum stocks that are more tech-oriented. Today we're actually going to take a look at some value stocks with nice patterns. So why are these first on your radar?
Yeah, I think Scott and short-term traders focus a lot on high momentum, high beta, like you said, tech-oriented stocks. But I think if you take a different type of approach and different type of look at this market, there's a lot of things that are happening that aren't on the radars of day traders and short-term traders that are very attractive if you're taking a longer-term perspective. There's a few stocks.
Right. Let's take a look at some actionable value stocks. I know you find a few in the discount retailers. Yeah,
the discount retailers is one sector that we have some really nice patterns in. They aren't the sexy momentum names for the most part, like I mentioned that we talk about in the morning call. But if you take a look at a stock like Walmart, it was one of Scott's 2012. It was his retail stock pick of the year that he talked about on CNBC. And I definitely like that pattern as well. We're going to zoom out actually to a monthly chart. Take a look at that, what Scott was looking at back when he named it his retail stock pick of the year. And you had Walmart in a decade-long channel. As a trader, you like to see consolidation, and bases. I don't know if you like to see a decade-long base, but you finally got the break out of that base and a nice move in Walmart. It had a small little pullback, but we'll go back to the daily chart here. You can see that Walmart has started to perk back up again and has a pivot high here back from October that I think it can definitely challenge if the market cooperates and continues on its most recent path. But I think Walmart is definitely one to keep an eye on for more upside. Another one is Target, sort of a competitor with Walmart in a lot of areas, and it has acted even better. It's above pivot highs, and yesterday it looked like it really wanted to take off and closed a little bit off the highs, but still remains very bullish. We'll zoom out a little bit to the weekly chart. Same story, breaking above the pivot. Not much in the way of resistance. You have this prior all-time high here back from 2007 that looks like it could come into play around 70.70. And then the last one we'll take a look at is Costco, which I love Costco. I love going in there, loading up on Gatorade and beer sometimes, going into the food court. It's just a great experience and a very popular destination for definitely big families and things like that. But the stock is agreeing with my opinion here based on its price action. You see Costco has been in a firm uptrend over the last several years and looks now to be breaking above this pivot high that's around 105.97 and broke above it yesterday with a nice gainer after the gap down. Another one that I think has more upside in the discount retail sector.
Yeah, and there are other value stocks out there that are building nice upper level bases, which we know is a sign of a potential breakout. Take McDonald's, for example, which is building a base at a strong support level.
Yeah, you have even more value-oriented stocks, like you talked about McDonald's and a couple others that I'm going to go over that have acted really well. And if you've been only paying attention to some of the erratic action in the momentum names, you haven't noticed some of this great trending action that we've seen in these value type stocks. And we go to the chart of McDonald's, not MCP. We certainly don't want to be trading that to the long side. McDonald's, nice upper level base. It had a pullback in the fourth quarter of last year. It looked like it was perhaps weakening a little bit, but it's responded very well. We continue to get a better look here from the weekly chart in stocks like this. But McDonald's, like I said, didn't even get down to the 200-day. Now is back above all its short-term moving averages. It looks like it's ready to challenge this pivot high here above the 102 area. I think this is definitely something to keep an eye on. Pays a nice dividend. Obviously McDonald's is a huge brand and they're very good at what they do. I remember when I was in college, we had one of the executives from McDonald's come in and talk, and he was basically saying that they're not a food company, they're a real estate company, and they really excel finding the right locations for their restaurants, and that drives a lot of their success. Just a little tidbit for you.
That's interesting.
Yeah. And then Pepsi is another one. A lot of times when you talk about value, most people talk about Coca-Cola, but Pepsi is performing really well, depending on your preferences, I guess, about whether you like Coke or Pepsi. But Pepsi on a short-term basis breaking above, even on the weekly chart, this pivot trending very well above all of its moving averages. We might even have to zoom out to the monthly chart to get a good look at some levels in Pepsi. And there you go. You see from 2007, the pivot high, an all-time high in Pepsi. We had the financial crisis a little bit after that, and you saw a nice pullback back near the 200-month moving average. But you see Pepsi getting ready to break above its pivot highs here. And then you have Procter & Gamble, which is, if you're starting a value portfolio, I think you start with Procter & Gamble. They house a lot of the brands, daily toothpaste brands and cleaning brands, all that type of stuff. They have a wide array of brands, and Procter & Gamble, like I said, pays a nice healthy dividend. If you go back to the chart, and it's also breaking above this 2007 pivot highs, all-time highs. And I think if we go back to the daily chart, you can see a nice upper level base that you can potentially, if you are trading it like you would trade a technical stock, you can base your stop loss at the low of this range, and you can play a breakout, maybe start to creep into a little bit here as it's above its 8 and 21-day moving average.
Great, and there are also a lot of high performers that should be on your radar, names like J&J, Coca-Cola. What do you think is drawing traders to stocks like these?
Yeah, I think in general, I'll go to the charts in a second, but you're seeing a flight to safety in this market that I think is evidence that there's still some anxiety and some jitters after the financial crisis. And like I talked about earlier, is that we have the Dow at all-time highs, and you have the S&P within a couple points of all-time highs, but you don't have the exuberance that you often associate with markets that are at all-time highs. I think one of the reasons is that you've seen a flight to safety a little bit, and you've seen not a lot of participation in terms of people piling back into the equity markets after some of the carnage that we saw during the financial crisis. You look at a stock like Johnson & Johnson, that's what a lot of people have been looking to buy. They haven't been looking to buy some of these very volatile tech names, and the banks have had a nice run up recently, but not compared to a lot of these value stocks. You see Johnson & Johnson, huge move on its highs. You also have Coca-Cola. That's Warren Buffett type favorite, nice dividend. You see people piling into that. It's back up to near its highs. We go out to the weekly chart on this. You can see a nice little sort of cup that's forming on Coca-Cola. And then you talk about Kellogg's, another value staple. Look at that run in Kellogg's. That's an enormous run for a value stock that pays a very healthy dividend. And I think right now with the market at highs, it's hard to chase these prices, in my opinion, a little bit. And if you're looking to put some money to work, I think some of these value stocks that we talked about today, I think it would be prudent to put some of your money to work in those type of stocks.
There's some good names to watch. And we're, of course, also watching the financials, as they're, of course, tied to the European debt crisis and concerns that the Cyprus bailout will become a template for other European nations. So we're going to go in the trenches with the financials. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet, at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with the financials, which is a heavily watched sector, especially in light of the European debt crisis and the Cyprus bailout. Why are you paying such close attention to the financials, and why are you so cautious about them?
Yeah, recently you've seen the financials lead the market, like we talked about in the open, is that the European debt crisis has been sort of off to the side and not been a major concern for the market this year and over the last few months. But you're starting to see some of those headlines creep back in. You have the Cyprus situation that sets a little bit of a dangerous precedent that could lead to some trouble for the banks down the road. If you do start to see deposits getting taxed like you saw in Cyprus, it could potentially lead to some bank runs and lead to some anxiety in the banking sector. And then you saw a weak Italian debt auction. That's just a reminder that the European debt crisis hasn't gone anywhere. we continue to kick the can down the road with all the debt in Europe, but it's going to continue to rear its head at certain points. And so, I think right now, with some of those headlines coming back more into focus, the financials are something to be a little bit more cautious on.
Well, especially probably a stock like Goldman Sachs, which has been very weak as it's most sensitive to the European debt crisis and, of course, the Fed's recent rejection of its capital plan. So what are you watching in Goldman Sachs? What levels?
Yeah, Goldman has been one that's been leading the financials for the most part during this rally this year especially, but more recently it's been weakening, and I think it's definitely something to keep an eye on. Yesterday, Warren Buffett announced that he's buying warrants in Goldman Sachs, but it still wasn't able to trigger much of a move, and I think with its exposure to Europe, it's one of the more sensitive banks to headlines about Europe, about the Cyprus situation, and also about the Italian debt auction. I think it's sort of teetering on some upper level support, and it's one that I would definitely be a little bit more cautious on right now. We'll go to the chart of Goldman Sachs, take a look at that. We'll go back to the daily. And like I said yesterday, it was able to perk up a little bit on that Warren Buffett news, but it's still below its 8 and 21-day moving averages, which are both curling down. And I think, in my opinion, that this is going to break this upper level pivot support area and potentially test deeper retracement levels. I don't know how far it's going to retrace. There's not a lot of support here during this rally that started in early to mid-December. So I'll definitely watch Goldman Sachs very closely for potential weakness.
Bank of America is another one that has been a leader, but has been showing some weakness now, even lost the 21-day yesterday. So where might next support be?
Yeah, Bank of America has been one of the strongest bank stocks in recent months, and its capital plan passed the Fed test, and they're going to become more of a value-oriented stock now after the financial crisis. They announced $5 billion buyback program and $5.5 billion redemption of preferred shares. We go to the chart of Bank of America. It started to weaken a little bit too. Like you said, it lost its 8-day. It's right around its 21-day. It'll be important to see whether it holds this 21-day, and then if it does test the 50-day, whether it holds that moving average. But right now, this looks like one of the banks that I would want to be involved into the long side. If you are looking to buy dips in the banks, this is one that looks attractive to me.
Now, does Wells Fargo look attractive to you? Because this is a stock that has less exposure to Europe, which makes it less of a risk when it comes at least to the debt crisis. So is this one worth a look?
Yeah, Wells Fargo just traditionally is a more risk-averse bank, and it's one of those more value-oriented banks when you talk about separating those high beta, high momentum stocks between value stocks, which has been sort of a theme of today's show. So Wells Fargo was it's a risk-averse company. It wasn't as beaten down during the financial crisis. It absorbed Wachovia, and it doesn't have the wild price swings that you see from a lot of the other banks. Sometimes it doesn't have the momentum to the upside either, but I think continuing to play on that theme about value and jitters from the financial crisis, Wells Fargo is one that I would be looking to put away long term if I was looking to buy one of the banks, due to the lack of exposure to the European debt crisis and due to the fact that it doesn't get a lot of the downside that you see and the volatility in some of the other banks. As we look at the chart here, it's pulling back into its 21-day moving average. I want to zoom out a little bit, take a longer look at that. But it's sort of retesting this prior breakout, and we'll see if it's able to bounce from there.
All right, those are some key names in the financials that we should be watching. Let's do some quick hits here and talk Visa, which continues to look good after 3 up days. Is it due for some digestion?
Yeah, the credit cards have been extremely impressive over the last couple of days. In particular, Visa. There's some news about it potentially acquiring Visa Europe, and analysts really like that idea, and that's sort of helped trigger some of the move that we've seen in Visa. We just take a look at the chart really quickly. Go back to the daily so you can get a better look at it on a short-term basis. But great 3 days of price action. Yesterday it opened lower with the market, but showed resilience and broke the previous day's high, and a very nice close yesterday.
And Facebook, one of the stronger stocks yesterday, closed the day up 3.5%. So could we see continuation to the upside today?
Yeah, Facebook had a nice red dog reversal type strategy yesterday after being in a multi-week downtrend, and it woke up. It was up over 3% yesterday. This is one that I think will be on traders' radars today in what could be a quiet session, but after yesterday's awakening in Facebook, I think this is something to have on your radar. And
then we saw Netflix rejected at resistance yesterday. Further pullback in store?
Yeah, Netflix, it's one that it's been extremely impressive since its earnings, basically doubling in price. And then 2 days ago, after positive comments from Pacific Crest, it woke up. Yesterday, it tried to push higher and potentially break these pivot highs, but it sold off a little bit into the close and doesn't look quite as good, but it'll be something that traders will obviously be watching because it brings volatility, and it's definitely tradable from a momentum perspective.
Okay, and then there's Open Table. Take a stock like this, which is building a nice mid-level base. Where should we watch it for a potential breakout?
Yeah, there's a couple of these stocks that I have my eye on. There's not a lot of compelling patterns out there right now, but Open Table has a nice upper level base that you can watch. Looked like it wanted to break out a couple days ago, but failed, which can happen because it's a thin stock and a thin tape, so that's not terribly surprising, but I continue to keep an eye on that pattern in Open. And then Mercado Libre, the Latin American eBay, I like even better. In the last 2 days, it's had even more impressive price action, and it's getting ready to break above this upper level base that it's forming, which we love upper level bases because it allows you to set your stops and set your triggers, very defined levels. And
Monsanto, sorry about that, showed strength yesterday after his licensing deal with DuPont was struck. It actually saw a new high yesterday, so could continuation be in store today?
Yeah, I mean, Monsanto started to separate itself from a lot of the other ag stocks that have been weak and lagging the market over the last few months. You know, go to the chart of Monsanto, talked about that DuPont licensing deal. Great 2 days of price action, breaking above this upper level base that you see in Monsanto that's been forming during 2013. And we'll zoom out just to see where this can go. I mean, Monsanto has room back to its all-time highs in 2007 and a very good price action. And this is one, if you're going to play an ag stock, I think Monsanto is the one to be involved with right now.
And finally, Aquin Financial has had 3 nice updays. It got back above the 100-day. So what are the levels to watch here?
Yeah, Aquin is one of those mortgage servicing companies that was on a tear after the new Fed capital requirements forced the banks to offload their mortgage servicing portfolios onto these mortgage servicing companies, and it had a very sharp sell-off after some weak numbers came through. But recently, it's been able to bounce. You go to the chart, you see a nice, really nice 3-day bounce that's been sort of throughout the sector. But Aquin is the biggest one in the group. Very impressive, coming back into its 21-day. We'll see if that level gets rejected or whether it can continue to climb.
So heading into the last trading day of this holiday week, what do you think traders should keep in mind today?
Yeah, I hate to keep harping on this, but it could be a quiet day today with the holidays and everything like that. But we talked about a stock like Facebook could be in play. Netflix, always a momentum favorite for people. But in general, I think sitting on your hands, staying a little bit quiet and disciplined, patient today, I think is going to be the best approach. Like I said, I hate to keep saying that, but with the market at all-time highs and some faulty signals, you got to follow your process, and you can't ignore the signs that are out there, even if we do continue to rally. And definitely keep an eye on the headlines. And you hate the trade headlines. We focus on the price action, but it'll be interesting to see if something happens in Cyprus more significant than what we've already seen.
All right, that's your morning call for this Thursday. Have a great day, everyone, and a great long weekend.